Hello guys, this is Joseph, the SMC day trader. So before we got started, don't forget to subscribe my channel and leave a like button. If you have any question or you want to learn more about SMC or ICT strategy, contact me with the WhatsApp and I will answer to all the questions there. And don't forget to use my code to register the exchange for 10% off of the trading fee. So let's get started. So today we're going to talk about what is a good trade and where should we put the profit point and our stop loss. So just take yesterday for example. Here we talk about the liquidity grab here, and we talk about the entry point too. We're going short here in this candle. So now we're going to talk about where should we put the stop loss. So normally there's two or three ways to put our stop loss. First is you find a higher point. For example, the higher point here is here. So we will do like this. And the profit point we can target, we assume here it's a potential resist point or support point here, because it have been tested many times, 3-time test. So we assume in this level, the price will get stopped and respect to this support. Okay, so we can put our profit point here. Sorry. So now before we enter, we'll always check the risk and the profit. And we have to know every trade is not 100% works, and there's no 100% works strategy too. So what we can do, the things we can do is to make sure every time we enter the marketplace, the stop loss and the risk is more profitable. That means, for example, we lose 1,000 here. If the price hit here, for example, we lost 1,000 U, then we should find somewhere the profit point it's more than 2,000 U. We always have to find a profit point more than 2,000 U, because just easy math. Just for example, every trade we have 15% to win and 50% to lose. Honestly, 50% is very high. Like it's very good win rate. So at this point, in a big amount of trading, or just for example, in 10-time trade, we win 5 times with profit with 2,000, that equals 10,000. This is our profit. And our loss is 5 times 1,000. So that means we will lose 5,000 during 10 trades. So after that, we can know the profit total will be 5,000. So you just imagine you don't have to have a 80%, 70%, or even 90% win rate. You just have to have a 50%. Even you got less. For example, if you are a beginner, you have maybe, even it's like 40% win, 60% lose. You can still make profit from this setup, because we'll see. We'll make 8,000 here and look 6,000 here, and the total profit will make you 2,000 USD. So that's very important, because normally people cannot reach over 50% win rate. Like if you are very professional, 50%, 60% it's possible, but for most of the user, I think 40% it's more reliable win rate in our long-term trading. So don't forget, we always fighting a risk and profit point more than 2. Just imagine if you have this win rate, like as 40% win, and 60% lose, and you only make 1 risk and 1 profit, then in the final you will lost. Just change the number here. If it's 1 risk and 1 profit, and then you will minus 2,000 in the end. So it's more important to balance your win rate and your profit and risk. So that's why I'm always talking about, we always find some trade over 2 profit and 1 risk. Okay, so when we understand this, let's talk about where to put the stop loss. So one is like this, we put the higher point because we respect the price will not going up because of the liquidity grab. And what is second one? So the second one is order block. And what is order block? Order block is the first candle before the price going up or going down intensively. And often the order block comes with a fair value gap. Fair value gap is a gap between 3 candles and not gap filled. For example here, let's take an example to show what is fair value gap in case someone don't understand. So there's 3 candles here, 1, 2, 3. Between these 3 candles, you can see the price gap pushing up immediately and leave a price here not get touched by any shadow or any candle. So this we call it as a fair value gap. And why this fair value gap is very important? Because that means the price get pushed up too quick. The price get pushed up. Price get pushed up very quick. And a lot of order between this gap, inside of this gap, cannot be deal. Like a lot of people want to sell and buy in between these 2 prices, but because the price go up too quick, so the deal cannot be finished. So we can see this is, you can see there's a lot of, in this area, there's nearly order got dealed here. Instead of here, you can see a lot of buy and sell here, but here, because the price could push up immediately, and nobody can make a, not nobody, I mean like, it's hard to make deal here because moving too quick. There's no time to make deal here. So price want to go back. The price want to go back here to complete these unfinished order and then continue either going up or continue to do, like normally we're going up, like get bounce and then continue where you want to go, either going up or, but important thing is after these order get completed, the price will get pushing up. That's what we expected. So that's fair value gap. So let's go back. A good order block often appears after, order block often comes with a big fair value gap. So you can see, for example, we noticed, just for example, we noticed a good order block here and a big fair value gap here by 4 hours chart. Sorry, I'll change to 4 hours chart. It's more clear. You can see the 2 candle here didn't close the price here, so leave a very big fair value gap. So the price go up intensively, first one, and second one, big fair value gap. So we can recognize the last candle here create an order block. An order block means the price don't want to break through here first time, or at least they will have a reaction to bounce back because the big money entry here, all the big money put their entry here. Big money put their entry here, and this is their stop loss and their target point whenever it is. So we can imagine before they got profit, they don't want, or even they didn't get profit, or they get profit, we expect at least one time this order block will protect us from the opposite side price trend. So here, first we can see this combination make one time, so we can see the big price drop here, and nothing can stop it, just until it hits the fair value gap. So that's the first time it works and bounce back. And second time here, try it again. And this time, not only fair value gap, and also hit the order block. So it gives a very good bounce too. It did respect to this order block. And here's the third time going back. Although it leaves a few shadow here, it seems like it's not working. But we have to know the candle here, it's not going through. The candle close is not going through the order block. So we take it as a respectation of this order block. So it's worked the third time and pushing back the price. And fourth time here, again, and again. Even here. Test again and again and again. Just until here, the price breakthrough. So now we can see between so many times, so many days, this order block is providing us a very good protection from the price hitting our stop loss. So what we have to do right now, yes, we should use this too. So when you get into an order, when you get into a marketplace, we're always considering, it's not always happen, but if it's possible, we're always considering put our stop loss around, it depends where you entry, but we can put just in the end of order block, or just give it a little bit space here. For example, you entry at this candle, because go back a little bit, you entry here, and go for two profit and one risk. You can see, even this pushback again, here, pushback again, the second time here. But this order block always protect us from hitting our stop loss. So that's a very important point. You always want to put your stop loss just above a little bit or under a little bit the order block. No matter it's a downtrend order block or it's uptrend order block. You can see here too. So here we see a strong order block. I think it's a little bit difficult for people to recognize the downtrend order block, but it works the same. So this is fair value gap. So we're considering here as an order block of downtrend order block. So you can see here, once the price get bounced to a fair value gap, just right immediately, and maybe someday we'll get tested again. So what we can imagine once if in the future the price hit here, we should respect the order block to give at least one time bounce back. Maybe it's only a little bit bounce back, but we respect order block always work at least one time, maybe not second time, because it seems like it's not strong order block because the fair value gap is not impressive and the fair value gap already used. So that could cause this order block not so strong. But at least we respect it goes back again. For example, here you can find a downtrend. There's no here. Just leave a small fair value gap here. So we considering here an order block. It should it's not always you can see this candle. Yes, it could be order block. Or sometimes we also considering this higher point too. You can put this into consideration. But in theory, it should be the last candle here, or even this high point here as an order block, downtrend order block, and this is fair value gap. And does it work? It is. See, it's get respected one time here, and the fair value gap also work one time here. It's not impressive because it's not very big. Get one time bounce and go back and bounce back again. And the price is drop immediately by hitting this order block. In the future, maybe we imagine if one day this price got hit here, we'll get bounced back again, at least one time work. But we already see it's tested one time, so we don't imagine it's a very, very strong order block because already tested. Let's find an example, last example again. So I think uptrend order block is easy to find. So let's find another downtrend example. Oh yeah, so again, I forgot to explain. The good order block often appears after liquidity grab. And the bigger fair value gap is, the stronger the order block will be. That's also important. So for example here, you can see recently it makes a order block here. Technically, you can see this is order block because last candle, but because of this high point, so I normally will count this as order block too in this range. It's a downtrend order block. And what is liquidity grab? So you can see here, it remains a lot of buy-side liquidity. So here we have a liquidity grab to hit all the stop loss here. So that makes this order block more stronger. And the second one is it makes a big fair value gap here. So these two things make this order block strong. So when the price gets here, we can see right now, it's giving action. Although it's get test first time fair value gap here, first test, but we also respect when the price touch here, when the price touch here, touch this point, when the price go up here, it should be bounced back at least one time. It could be big bounce or small bounce. I think it will be a small bounce just around this level, because we can see it's a immense uptrend here. So we don't expect the bounce to be impressive, but still it will protect you from hitting your stop loss immediately. At least you will see one time bounce back to this level and protect you one time. So for example, if you're going short here, if you put your stop loss here, you will always get safe. Maybe if it's me, I will put just a little bit above the higher point here. You will always get safe. For example, in the future, if it hits here, maybe you can try to get, but you have to be careful because here the fair value gap get one touched, get tested before, and this is a immense uptrend. So maybe when the price hit here, just for example, we can try to go a short here and put this above the order block and get to profit just right here, I assume. So that will be a 2.6 profit and risk, and also considering a good profit trade. And after that, maybe the order block will be breakthrough because it seems like the price is going up intensively. Okay, so that's all for today. And if you have any question or want to learn something more, don't forget to contact me in WhatsApp or leave a comment. And don't forget to use my link to register the exchange to get 10% off of all the trading fees. So hope to see you soon. See you next time. Bye.